By the end of this video, you should have a full understanding of Tesla's entire business model, all of the opportunities that are ahead for Tesla, and just about everything that they announced in the latest quarterly report and conference call. And at the end of the video, I share my thoughts around the question, is Tesla stock a buy right now, and what I will be doing with my shares. From those of you who are here from TikTok, let me know in the comment section, and thank you so much for joining me, and thank you so much for all of your support. For those of you who don't follow me on TikTok yet, follow me at Daily Stock Talk on TikTok, and you could follow me at Abu the Investor on Instagram. And for a little more context, I currently own 19 Tesla shares with an average cost of $47.80, and I'm currently up 1,559% on my position in just a year and a half. If I missed anything, please let us know in the comment section, and if I mess up on anything, also let me know in the comment section as well. Make sure to like and subscribe if you enjoyed the video, and let's just get right into it. We'll get into the jam-packed video in just about 10 seconds, but for all of my Canadian viewers, make sure to check out the links in the description for free money if you're looking to invest in stocks or Bitcoin and Ethereum, but you must sign up through the links down below to receive the free $10 cash reward and the free $30 cash reward. So on Tesla's earnings released January 22nd, Tesla posted a record quarterly revenue, but they missed on profit expectations. So as we can see, Tesla posted $10.7 billion in revenue, where $10.33 billion of revenue was expected by analysts. When it comes to profits or earnings per share, Tesla posted 80 cents earnings per share versus $1.01 earnings per share expected. So we're now going to jump into the quarterly update that Tesla released, and we're going to jump straight into the financials. So revenue of $10.7 billion for the quarter indicates a 46% increase year over year. And of that $10.7 billion, Tesla brought in $2.06 billion gross profit. And again, this was a miss from expectations, but that was still up 49% year over year. Total GAAP gross margin was down actually about 4% to 19.2%. So profitability was one of the first things that was discussed on the conference call for Tesla. Number one, investment in the Fremont factory reduced their margin. Number two, they also stopped production of the Model S and Model X, some of the more profitable vehicles, for reasons which we'll explain later. Number three, they rolled out their huge casting machine for the Model Y, which exerts 6,000 tons of pressure, which is actually the biggest casting machine in the world right now, and that had a short-term effect on their margins. And number four, there's also been supply chain instability due to the pandemic, but they also went ahead and said if you adjusted for these short-term incidents or investments, Tesla would have actually seen an improvement in margin. This is actually a great thing because these short-term investments will actually improve Tesla's operating margin drastically over the long term. If we look here, we can see that automotive revenues made up $9.3 billion of Tesla's revenue, being up 46% year over year. And for those of you who are new to analyzing companies, we like to look at year over year numbers because we like to compare apples to apples. We want to compare this winter season to last winter season and this summer season to last summer season. Quarter to quarter numbers are also great to look at, but usually the most accurate comparisons will come from year over year numbers. Usually Q4 or the Christmas season will usually be the best quarter for most companies. Regulatory credits made up $401 million of revenue. And for those of you that don't know what regulatory credits are, it's basically credit that the government gives to Tesla for producing zero emission vehicles. And because Tesla doesn't actually need these credits, they actually go ahead and sell these credits to other automakers. So essentially these other automakers are paying Tesla hundreds of millions of dollars a quarter to make more Teslas and to build more gigafactories. They're doing this because the fines that they're paying to the government for polluting the earth are much bigger than what they would have to pay to Tesla to take those zero emission vehicle credits from Tesla. Next up is adjusted EBITDA, and it does look like EBITDA fell a little bit, but again, short-term profitability is not the main concern for us long-term investors in Tesla, especially when it comes to like automotives. Right now, all of these revenues are coming from automotive revenues, and for those of us who are still in Tesla at an $800 billion market cap, which is basically larger than all of the other automakers put together, it should be clear by now that this isn't only about automotives. So the short-term decline in automotive profitability isn't really a big concern for me. Next, we're going to look at free cash flow and cash equivalents, which in my opinion is the most exciting part of this financial summary. So free cash flow was up 84% year over year. Tesla managed to bring in $1.86 billion of free cash flow in the fourth quarter alone. And they now have $19.3 billion of cash and cash equivalents on their balance sheet. They literally have a war chest of cash on their balance sheet, and they're able to survive just about anything and everything that comes their way. To put this into perspective, one gigafactory costs about $3 billion to $5 billion, and Tesla has about $19 $19.3 billion. And when we look at Tesla's balance sheet, it's actually very healthy right now. They're sitting at $19.3 billion in current assets with only $6 billion in current liabilities. You always want to see a company with more current assets than current liabilities, and there's only very few exceptions of you making a good investment in a company and that not being the case. So of course there's several things that Tesla can do to maintain or accelerate growth with all this cash on their balance sheet. And on the conference call, Elon Musk even confirmed that he believes that Tesla can maintain or exceed a compound annual growth rate of 50%. And he believes that this year and next year, they could even see compound growth rates of more than 50%. And for the following years after that, he believes that we could see an average compound annual growth rate of 50%. So for a lot of us invested in Tesla for a while, we already know that Elon Musk has said this in the past, but for him to come out and repeat that on this conference call just gives us more conviction and just lets us know that nothing has changed and everything is going as planned. Some things that Tesla can do with this cash is pull forward capacity. They have phase 1, phase 2, and phase 3 already planned out for some of their gigafactories. They could take this cash and do phase 1 and 2 at the same time to really pull forward their production capacity. Another area that they could focus on is battery production. They said that they really want to encourage their battery suppliers to make as many batteries as they can, and they're willing to take every single battery that they could make out of their hands. And they're making their own batteries not to take their suppliers out of business, but to actually supplement the demand that there is for batteries. So actually with the supply problem there is for batteries, Tesla will be making their own batteries. And Tesla has top-tier battery technology years ahead of their competitors. And now with more competitors entering the electric vehicle race, Tesla's looking to make their own batteries, so they're not stuck in bidding wars for batteries like the rest of their competitors are going to be. So really for Tesla, there's no demand problems like Wall Street has said in the past, but really there's a supply problem. And they're looking to fix that by building a pilot battery plant, which will be the 12th largest in the world as a pilot plant. Meaning just Tesla's initial phase of the startup plant will be the 12th largest battery plant in the world. And Elon Musk has gone on record saying that their energy storage systems could be a bigger business for the company than selling cars. But we'll talk about that in a second. Another area that they said they would like to invest in is service center expansion and expansion of their supercharger networks. Tesla already has the biggest supercharger network out there, but they're really looking to expand their supercharger network to really get ahead of future demand. Those are just a few areas that Tesla touched on, but then again, this is arguably the most innovative company in the world, and who knows what they're going to invest in next. Next up, we're going to look at the operational summary. So if we look at the operational summary, we can see that 180,000 vehicles were delivered in Q4 2020. But we already knew this, the numbers came out a while ago, but we'll just go over it again for those who missed it. So 180,000 vehicles, and that's a 61% increase year over year. And as you can see here, the numbers were pretty weak in Q1 and Q2, but you have to keep in mind that these are the numbers that they put out during a pandemic. And during the first quarter and second quarter of 2020, Tesla saw multi-week shutdowns and there was massive uncertainty in the markets in Q1. So I don't think people were really looking to purchase vehicles. And if we look at production, we can see that Tesla increased production by 71% year over year. But if we take a closer look at these numbers, we can see that Model 3 and Model Y production was up 88%, and Model 3 and Model Y deliveries were up 75%. And this has been Tesla's main focus because these are the cheaper vehicles that more people can afford, and these are the more profitable vehicles that Tesla makes. So they've really been focusing on that. So when you look at the Model S and Model X production numbers going down 10%, this isn't because that these vehicles aren't selling well. This is really just because Tesla was looking to sell their more profitable vehicles and to get more vehicles in more people's hands. But as you can see, even though production of the Model S and the Model X went down 10%, Tesla still managed to sell every single vehicle that they made. Man, I remember when analysts were saying that there's no demand for Tesla, which is just insane. Tesla managed to hit their goal of delivering 500,000 vehicles for the year of 2020, a goal that they set before this whole pandemic was even a thing. Just think about that for a second. And for this following year of 2021, I expect vehicle deliveries to increase by 67% minimum. And I believe in 2021, Tesla will easily be able to deliver 830,000 vehicles. I know I did make a typo in this video and said 730,000, but my conservative estimate is 830,000 vehicles for the year of 2021. Now we're going to look at the results and talk about the energy side of Tesla's business that Elon Musk believes could be bigger than their automotive business one day. It's 2021 and it really just blows me away when people constantly compare Tesla to just automotive companies. Let's just take a look at Tesla's mission statement. Tesla's mission is to accelerate the world's transition to sustainable energy. Period. And now let's look at the top 10 revenue companies in the world. Number 1, we have Walmart, which is a retail company. Number 2, we have Sinopec, which is an energy company. Number 3, we have State Grid, which is an energy company. Number 4 is China National Petroleum, which is an energy company. Number 5, we have Royal Dutch Shell, which is an energy company. Number 6, we have Saudi Aramco, which is an energy company. Number 7, we have Volkswagen, which is an automotive company. Number 8 is British Petroleum, which is an energy company. Number 9, we have Amazon. And number 10, we have Toyota, which is an automotive company. 8 of the 10 top revenue companies in the world are either an energy company or automotive company. Just let that sink in for a second. So as you can see, Tesla sells these beautiful solar roofs. They say here, replace your roof and produce clean energy. Beautiful solar without compromise. 3 times stronger than standard tiles. Pays for itself over time. And with their Powerwall or battery storage systems, you'll basically be able to store your energy. And you'll have 24/7 outage protection. And basically this will be able to power your entire home. And Tesla is not only looking to sell these for residential, but also commercial purposes. Powerwall is a compact home battery that stores the energy you produce with solar roof, making it available anytime, at night or during an outage. And within the Tesla app, you can monitor your energy production in real time, control your system from anywhere with instant alerts and remote access. After looking at the top 10 revenue companies of the world, it should be clear how big of an opportunity energy and utilities really are. But I just want to share these 2 clips with you guys on what billionaire investor Chamath Palihapitiya has to say about energy and Tesla.
Longer about cars. That's the first wave of growth, and I think people are pricing in an evisceration of traditional autos and an enormous shift to EVs, of which Tesla will get the disproportionate share. So now what is the bet? If you ask me as an investor who loves that company, it was in page 4 or 5 of their quarterly earnings release where they talk about the energy business. And they said a couple of interesting things. The first is that it was profitable. And the second is that they're also producing software now that allows effectively anybody to become a distributed utility. Now think of that for a second. You are talking about one of the most predictable, reasonable businesses that have raised hundreds of billions and trillions of dollars of debt. And what Tesla is going to do with their battery packs and their software is all of a sudden allow each of us to be in the energy business as well. Again, people will get angry, they will not understand, they will try to push back, and they will be wrong.
And here's the second clip.
We are going to disrupt utilities because if you can have residential solar combined with residential storage, combined with software that allows an individual person to very simply understand how much energy they've generated, understand the economic value of that energy, and then contribute it back into the grid at times where you don't have to build peakers and you can do load smoothing, you're going to take $1 trillion of power infrastructure and just incinerate it. And it's going to drive incredible numbers of bankruptcies amongst utilities. PG&E will have been the tip of the iceberg. You're going to see hundreds of billions of dollars of debt basically just go sideways. So it is incredibly, incredibly disruptive. And so, I am very focused on buying businesses that I think will disrupt the utilities.
All right, so we could talk about how big this energy opportunity is forever, and we could go through slides and charts and PowerPoints, but maybe we could save that for a future video. My point is that Tesla's entering this $1 trillion automotive market. They're about to dominate that going forward. They're also looking to disrupt this $5 trillion plus energy market. They're one of the world's leaders in battery technology, and they're driving costs down very, very quickly. So essentially, Tesla is pushing the world to sustainable energy through electrification, and they're building an entire ecosystem around that. And as huge as these things may seem, that's not all of the Tesla story. There's still much more. But we'll get to that shortly. Now let's look at the actual numbers Tesla reported for their energy business. So in Q4 of 2020, Tesla's solar business grew 59% year over year, and they deployed 86 megawatts of solar. But Tesla's energy storage business grew 199%, and they deployed 1,584 megawatt hours of energy storage. So here today, these numbers are still very, very small, but the growth that Tesla is putting up is massive, and I expect this growth to continue for years and years and years to come. And of course, the total addressable market for energy is much larger than automotives. But it's really the synergy of the two that's really going to give Tesla a competitive advantage against their competitors. So although revenues from energy and energy storage grew, energy wasn't actually profitable this quarter. But what I got from listening to Tesla's conference call is that they had to pull a lot of people away from the energy side of the business to really ramp up production on the automotive side of the business. They really wanted to hit those targets. And Tesla also said that they already started bringing people back to the energy side of the business. There's only so much a company can do at one time, but I believe the $19 billion of cash they now have on the balance sheet will help them immensely. Next on this operational summary, we saw a 21% year-over-year increase in store and service locations, where Tesla added 523 locations. They added 823 vehicles to the mobile service fleet, and this is basically where mobile technicians come to you to fix your vehicle. After that, we have supercharger stations, which saw a 41% increase year over year. And Tesla managed to add 2,564 supercharger stations in a single quarter. Supercharger connectors went up 45% year over year, and they managed to add 23,277 supercharger connectors. So here's another thing that I believe a lot of investors are still overlooking. The world is clearly transitioning to electric vehicles, and these vehicles are going to need to get charged. If we take a look at this article by Forbes, we can see that Tesla has 7,600 supercharger points in North America, compared to 1,400 charging points for ChargePoint and 1,660 for Volkswagen. And this is on Tesla's website, and you can see that you could easily get across the country in a Tesla because they have charging points everywhere. And I have confirmed that they're the leader in charging stations worldwide. Here's a glimpse of Asia and Australia, and here's a glimpse of Europe and the Middle East. Tesla has made it clear that they would like to get ahead of demand, but Elon Musk also mentioned something else that was very interesting on the conference call. Like I expected when I first invested in Tesla, Elon Musk said on the conference call that he's very open to letting any other company use these charging stations. With all of the data that Tesla has collected and all of their experience, they're able to roll out these supercharger stations better and faster than anyone else. And as of right now, they're basically the leader in the future gas station. Next up on this quarterly presentation is vehicle capacity. Installed annual capacity for the Model S and Model X in the Fremont factory went up to 100,000 vehicles when that was actually 90,000 vehicles in the last quarter. And that's very interesting because they spent money increasing an annual capacity, but they actually reduced production. But after reading this, it explains everything. Over the past few weeks, we have been upgrading our Fremont factory to launch the new Model S and Model X. These changes include a new powertrain, battery modules, battery packs, drive units, an entirely new interior, exterior updates, and other improvements. Production will resume in Q1 and ramp back to full capacity over time. We also continue to increase Model Y production, including integration of the single-piece rear underbody castings to meet customer demand. So really, they stopped production of the Model S and Model X in the late of the fourth quarter because they launched a brand new Model S and Model X. And production has already started and deliveries will be as soon as February. Which is actually crazy because a lot of people assume that this was going to happen late 2021. I don't know about you, but that new design for the Model S is just absolutely sick. They have the full touchscreen in the front and the full touchscreen in the back, and on your road trip you're playing multiplayer video games with all of the passengers inside of the vehicle. And these cars are connected to Starlink's, Elon Musk satellite internet service, and you're able to play multiplayer online, or just stream movies or do whatever else you want to do while the car is driving itself. And it was also announced that the Model S will be the fastest ever production vehicle 0 to 60. Just take a look at these numbers and the vehicles it's compared to. I don't know about you, but I'd rather spend this money on a $200,000 Model S than a $3 million Bugatti. And also out of the Fremont factory in California, they have an annual capacity of 500,000 vehicles. And I believe the Model 3 is fully ramped at about 250,000, 300,000 vehicles. And it also looks like the Model Y will be ramped to full capacity very soon. Then out of the Shanghai Gigafactory, they'll be producing the Model 3 and Model Y, and full annual capacity will be 450,000 vehicles. Gigafactory Shanghai has demonstrated the ability to sustain Model 3 production at or above a run rate of 250,000 vehicles a year. Model Y production started in late 2020 and is in the process of ramping to full capacity. Customer response to both Model 3 and Model Y continues to be strong. We recently started shipping Model 3 vehicles from Gigafactory Shanghai to several countries in Europe and APAC, which supplements production from the Fremont factory for those markets. So for those of you that don't know, the Gigafactory in Shanghai was completed last year, and this factory was literally built in record timing. Analysts weren't expecting this factory to be completed for another 6 months to 1 year, but this Gigafactory was built and producing vehicles before analysts even expected this factory to be completed. Also, China is the largest electric vehicle market in the world. Tesla is currently the leader in electric vehicles in China, and Tesla is the only American company in China to fully own their factory. Every other factory in China has part ownership from the Chinese government. Elon Musk has support from China, Russia, America. Like, this guy just can't lose. When we talk about connections for Elon Musk, they're literally endless. And then Tesla has 2 factories being constructed at the same time right now. They have one factory being constructed in Berlin, Brandenburg, which will be producing the Model Y. And then they have a factory in Texas, which will be producing the Model Y and the Cybertruck. So on the conference call, Elon Musk gave some updates on the Cybertruck. He said that we would be lucky to see some Cybertrucks come out this year, but volume production will start in 2022. And in development, we have the Tesla semi-truck, the Tesla Roadster, and also a future product. And there's rumors that Tesla is going to be coming out with a delivery van. Not actually a minivan, but a delivery van. So I found that very interesting. And that's just rumors as of right now. Tesla hasn't released anything yet, but that's just my prediction. Updates were given for the Tesla Semi, saying that they need like 3 times the amount of batteries for that truck, but the truck won't be coming out at 3 times the cost. So until they bring battery costs lower, and until it makes more sense to build these trucks, we won't be seeing volume production of these Tesla Semis anytime soon. But he does believe we could see some Tesla Semis this year. And he also did acknowledge hydrogen. And he said hydrogen would be a complete waste of time. And he's very, very confident that this can be done with electric batteries. It's just a matter of getting more battery cells. And if you think about it, they are building their own pilot battery plant. So the Tesla Semi will be coming, it's just a matter of time. So the update they gave on the factory in Berlin is local production and deliveries remain a key part of our growth strategy. While our total market share in Europe increased in 2020, Gigafactory Berlin should enable a significant increase in local deliveries, similar to what we saw after constructing Gigafactory Shanghai. Build out of our Berlin factory continues as planned, and we have already started to move machinery into the building. So of course, with more local production, we'll have more local deliveries, and this will only be cheaper for the customer, but they'll be able to get their vehicles much faster. And as you can see, total global market share for Tesla is still very low at this moment, but you can see the meteoric rise since 2017. And as the world transitions to electric vehicles, I expect this to just keep growing and growing and growing. So if we look at these numbers, we can see at full capacity, Tesla can produce 1,050,000 vehicles. And then we have the Berlin factory and the Texas factory in construction. And another thing to keep in mind is the Cybertruck. The Cybertruck is coming out in 2022, and pickup trucks are by far the best-selling vehicles in America. And believe me, Cybertruck sales will be insane. And also when it comes to these factories, especially the one in Shanghai, there's a lot of room for improvement and there's a lot of room for expansion. So it's not like they have to buy a whole plot of land again. They have this land ready for expansion, and within the factory that's already producing these vehicles, Tesla innovates every single quarter and makes these factories even more efficient. Tesla is focused on engineering and optimizing these factories as fast as possible. I just want to share 2 quick clips with you guys, and I also want you guys to look into these clips a little bit more on your own.
We've realized that the true problem, the true difficulty, and where the greatest potential is building the machine that makes the machine. In other words, building the factory. And really thinking of the factory like a product. I don't even have a desk or an office anymore. I'm just basically standing on the production floor and occasionally meeting in a conference room. And it's like, wow. I do my favorite thing, which is apply physics first principles. It's like the best tool possible. And it's like, wow, when you think of a production facility on a fundamental level, for a given size of factory, the output is going to be volume times density times velocity.
Like a factory that's moving at, say, twice the speed of another factory is equivalent to 2 factories, basically. And the company that will be successful is the company that with one factory can accomplish what other companies take 2 or 3 or 4 factories to do. Damn. So this is what we're trying to do here is say, okay, how do we with one factory achieve what maybe 5 or even 10 factories would normally be required to achieve.
And pretty much the last key part in this presentation is core technology, where they talk about autopilot and their full self-driving feature, their vehicle software, and their battery and powertrain. And before we jump into what Tesla had to say on these fronts, I want to show you guys a video on how well Tesla's autonomous vehicles work, and also I want to jump into ARK Invest research on autonomous vehicles. That literally blows my mind every single time, and I can't wait to buy my first Tesla. Tesla is by far and away the leader in self-driving technology. Now let's just jump into ARK Invest research to see how big this opportunity really is. So autonomous ride-hailing is likely to dominate urban transport. We believe autonomous ride-hailing will reduce the cost of mobility to 1/10 the average cost of a taxi today, spurring widespread adoption. ARK's research suggests hailing platforms will generate more than $1 trillion in profit per year by 2030. In addition, automakers and fleet owners could enjoy profits of $250 billion and $70 billion respectively. And Tesla would be considered not only an automaker, but also a fleet owner, because they already said that they're looking to send out these cars as robo-taxis. And here they show, adjusted for inflation, the cost to own and operate a personal car has not changed since the Model T rolled off the first assembly line. ARK estimates that at scale, autonomous taxis will cost consumers 25 cents per mile. So here ARK shows that the ride-hailing market today, which is like taxis and Ubers, generates roughly $150 billion in revenues globally, with take rates or profits of 10 to 30%. And these profits could be as high as 50% in high-performing cities. And so likewise, autonomous ride-hailing could generate 50% margins, but its lower price point should expand the total market from 150 billion in revenues, with take rates up to 60%, to 6 to 7 trillion by 2030. So what ARK is basically saying here is that right now, taxis and Ubers is basically a $150 billion market globally. But because the cost per mile is going to come down so significantly that the total market will increase to 6 to 7 trillion dollars by 2030. They're basically saying here that it's going to be so cheap to hop into one of these electric self-driving vehicles that most people won't even consider owning a car. And here they talk about the 3 different strategies different companies are taking for self-driving vehicles. And by the way, Waymo is owned by Google. Here they basically say Tesla's approach is camera-based, with less accurate sensors than LiDAR, making the path to full autonomy a more difficult problem to solve. Cameras do not rely on HD maps and should enable a much more scalable service. Tesla's could be the first autonomous taxi network to scale nationally. Here they say if Tesla launches its autonomous ride-hailing service successfully in 2022, ARK estimates adoption could approach 20% by 2025. If Waymo or GM is successful, adoption will probably be limited to 1% during the next 5 years, meaning they have so much more confidence in Tesla's approach and scalability than any other company working on this. So basically they say that we believe autonomous ride-hailing will undercut the cost of human-driven ride-hailing by roughly 90% in the US and 50% in China. As a result, the demand response to inexpensive autonomous travel could be higher in developed countries than in developing countries. Platform providers or companies that own the autonomous technology stack, Tesla, should garner the lion's share of the autonomous ride-hailing profits. So it's very important to understand this. Yes, other companies will have self-driving technology, but Tesla not only owns the vehicles, not only owns their software, but they also own their self-driving chips. They own the entire ecosystem of the self-driving feature, also the supercharger stations. So with them owning the entire ecosystem, they'll be able to take profits from just about every single piece of this puzzle, whereas other companies who are licensing this service or software, they'll have to be splitting these profits with other companies. But because Tesla owns the entire thing, they'll be keeping all of the profits associated with this ride-hailing service. So if we look here, ARK believes that in 2030, this is a $1.2 trillion opportunity for the platform provider, and Tesla is by far in the lead as a platform provider. When I invested in Tesla, they actually dropped Nvidia's chips to start making their own chips for self-driving, because they said that Nvidia was moving too slow. And by Tesla making their own full self-driving chips, they were able to collect all of the data on their own. And with millions of vehicles on the road now, with these chips inside of the vehicles, once this is complete and once this is fully approved, people can literally go on their app and just download full self-driving. People can go inside of their cars and just pay for this full self-driving feature and have this included inside of their vehicles. It's literally as simple as updating your phone. It's just a software update where you'll just pay for this and your car will be able to drive for itself. And the winner really comes down to who has the most self-driving data, because this data feeds back into their deep learning machines that will optimize this data to make their self-driving technology better and better over time. And Tesla by far has hundreds of millions of miles of more data of these self-driving vehicles actually going around on the roads. Then up next, we have a $250 billion opportunity for the auto manufacturers. Basically, these auto manufacturers who are making electric vehicles, who can then partner with companies who are offering autonomous technology. Man, and guess what Elon Musk just announced on their conference call? He came out to say that Tesla is very open to licensing their software to other auto manufacturers. So they don't even have to worry about spending all this money to compete with Tesla. You're 10 years behind, that's okay. We'll help you out by letting you license our software to make sure that you don't go extinct. In simpler terms, more profits for Tesla. So let's just quickly go over this slide, autopilot and full self-driving. Over the last few months, we released multiple software updates to our full self-driving City Streets beta test testers. With each iteration, the system is becoming more robust, resulting in the widening of our user base. We continue to work on the development of our Dojo supercomputer. This computer is designed to process video data from our fleet and train our neural network at an extremely fast rate. So Tesla is always working and updating this full self-driving feature, and I'm 100% confident that they will be the first vehicles on the road to offer full self-driving level 5, meaning that you don't even have to pay attention anymore to the vehicle, where the vehicle will be 100% more safer than the average human, which Elon Musk reiterated in the conference call. And he also touched on this Dojo supercomputer that they're working on, where he could license technology of this Dojo supercomputer to other companies. Next up, we have vehicle software. As has been in tradition in recent years, we released a holiday software update for our vehicles in December. This time, we include a variety of new games, enabled drivers to make an entrance with custom horn sounds through the external speaker, and improved driving visualization, among many other updates. And the thing about software is when it's done being built, it's literally just straight profit. Every single price increase is just an increase in margin. Like your Tesla is literally a computer on wheels. You could plug in a PS5 inside of a Tesla. You could trade stocks inside of a Tesla. You could stream movies inside of a Tesla. And Tesla owns their own app store, meaning as more and more developers start building apps within the Tesla app store, every single download or every single in-app purchase, Tesla will be able to take a cut from those purchases, the same way Apple does with their app store. And while other companies are licensing the software, Tesla will have this in-house, meaning they keep all of the profits, and they'll be able to license it to competitors if they wanted to. So the opportunity for software is so large. And also for full self-driving, the price has been going up consistently. The price was literally $5,000 a few years ago, and it's now $10,000. Elon Musk has come out to say that Tesla cars should be worth $100,000 to $200,000 with full self-driving package, basically saying that the price for full self-driving is going to increase drastically. But Elon Musk recently came out to say that this full self-driving mode will be open to all Tesla owners as a monthly subscription. And on this last slide, Tesla gives us their outlook for future years. And they basically start off by saying, given the number of significant projects in the pipeline, we have simplified our approach to guidance for 2021, enabling our teams to remain focused on achieving our long-term goals. Volume. We are planning to grow our manufacturing capacity as quickly as possible. Over a multi-year horizon, we expect to achieve 50% average annual growth in vehicle deliveries, which is nuts, but I still expect them to exceed that for the next few years. In some years, we may grow faster, which we expect to be the case in 2021. The rate of growth will depend on our equipment capacity, operational efficiency, and capacity and stability of the supply chain. Cash. We have sufficient liquidity to fund our product roadmap, long-term capacity expansion plans, and other expenses. Profit. We expect our operating margin will continue to grow over time, continuing to reach industry-leading levels with capacity expansion and localization plans underway. Product. We are currently building Model Y capacity at Gigafactory Berlin and Gigafactory Texas and remain on track to start deliveries from each location in 2021. Gigafactory Shanghai will continue to expand further through the course of the year. Tesla semi-truck deliveries will also begin in 2021. So now, finally, for what a lot of you have been waiting for, is Tesla stock a buy right now? So Tesla stock is currently trading at $793 per share, and their market cap is now $750 billion. The stock is now down about 10% from when they reported earnings earlier this week. But to put this in perspective, the stock is still up 400% in the last year, and it's more than doubled in just the last 6 months. And now a lot of people are wondering that they missed on profitability for their earnings, and is the stock going to crash now? So here's the thing. Apple reported earnings on the same day, and they absolutely crushed their numbers. Every single number that they put out beat expectations. And the stock is down 8% since then. Facebook stock absolutely crushed expectations, and the stock is down almost 10% since then. So while everyone's distracted over the GameStop and AMC stuff that's going on right now and with Robinhood, I've been saying this for a while now, and it looks like valuations are just very high right now. So a lot of people might ask, if you're being so negative, why aren't you selling out of your Tesla stocks? Why are you still invested in the stock market? Well, to put this simply, I do my best to not time the market no matter how tempting it is. I have built out my cash position to 15% of my portfolio now. And if we do get a dip in stock prices, I'm going to be ready to take advantage of that dip. But as for Tesla, I don't see a better place for my money for the long term than in Tesla stock, and that's why Tesla makes up 50% of my portfolio. If you're looking to buy Tesla stock at these levels just for the automotive business, then I'm sorry to say, but you completely missed the boat and you're paying way too much for this company. But if you start to break this company down and you look at the opportunity and disrupt automotive, energy, autonomous vehicles, software, which are all $1 trillion plus opportunities for Tesla, plus smaller things that we didn't really cover like Tesla insurance. By investing in Tesla, you basically have first access to everything else that Elon Musk comes up with and decides to pursue through Tesla. Someone with a proven track record, founding PayPal, competing with China and Russia with SpaceX, doing things that NASA didn't think was possible by launching rockets in space and landing them back on Earth, significantly bringing down the cost of space travel. I seriously don't see a better place for my money than in Tesla stock for the long term. Yes, a lot of growth is priced into Tesla stock, but for very good reasons. And Tesla is approaching a $1 trillion company, but if I'm looking 10 years, 15 years out, this will be a multi-trillion-dollar company. So really, my investing approach is long term. So if we get a dip in Tesla stock, what is currently the face of the stock market right now, the most popular stock of 2020, you best believe with the high valuations we have in the market right now, a lot of other stocks are going to come down with it. And I just ask myself, if I take my money out of Tesla stock, where am I going to put it? Like, what company out there do I see that has a lower risk that will outperform Tesla over the long term? This is arguably the most innovative company in the world right now, with the most genius CEO/engineer inventor that we've seen in a long time. Just think about it. Apple and Amazon are now entering the game that Tesla has started. I want to be invested in the leaders of the future and not the followers. Like, Elon Musk is on a mission and he has his foot on the gas, no pun intended. But I feel for you. It is very hard to buy into a stock that has run up so much in such a short amount of time. And this is not financial advice, but if I didn't own any Tesla shares and I just started doing hours of research now instead of a year and a half ago, I would start off by starting a small position in Tesla stock. And I know for a lot of us who can't buy fractional shares, a $793 US position isn't a small position for a lot of us. But how I would play it with the money I have right now is to buy a share, and for every dip that we get in the stock, I would add to my position. If it dips further, I would add more. And if it dips further, I would add more. But personally, I'm just thinking of the long term, 10 to 15 years out. I don't see a better place for my money, honestly. And that's just where I stand. It's easy to say that I'm just going to buy Tesla stock when it dips 20% or 30%. But just look at history. People who've said that for the last year have just watched the stock go up and up and up. And although I do expect Tesla stock to just level off for this year and just cool down, there's still no reason for me to sell off the stock to go and chase some other gains. Personally, I've been low-key hoping for a stock market crash. I would love to buy more Tesla stock at $450. I would love to start a position in Apple at under $100. But for 99% of people, timing the market simply just does not work. So what I'm going to do is just simply hold on to my shares, and as valuations get higher and higher, I'm just going to make sure that the cash percentage of my portfolio stays high. I'm currently at about 15% cash in my portfolio, and if valuations continue to stay where they are right now in the markets, I'm going to keep that at 15 to 20%. But am I worried about a stock market crash? No, because I simply just view them as buying opportunities for the long term. I couldn't care less whether Tesla stock was at $1,000 or $500 today, and I would personally prefer Tesla stock to drop down to $500. Because at that price, I would 100% buy more. Because regardless of what the stock price is doing today, I personally see Tesla as becoming the most profitable company in the entire world. And if you're looking to buy the stock but you're waiting for a 20 to 30% dip, I wish you the best of luck, because I'll probably be buying the stock as well. I really hope you guys learned something in this video, and if you watched the video until this point, thank you so much for your support. Make sure to hit that subscribe button if you're not already subscribed. This is only my second video here on YouTube, so make sure to hit that thumbs up button because it really helps out with the YouTube algorithm. Thank you for watching, and I hope to see you in the next one. Peace.